with Distriparks Limited Q1FY22 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 0 on your touchtone phone. Please note that this conference is being recorded. Today on the call we have Mr. Prem Kishan Gupta, Chairman and Managing Director, Gateway Distriparks Limited, Chairman and Managing Director, Gateway Rail Freight Limited, Chairman, Snowman Logistics Limited, Mr. Ishan Gupta, Joint Managing Director, Gateway Distriparks Limited, Director, Gateway Rail Freight Limited, Director, Snowman Logistics Limited, Mr. Samvid Gupta, Joint Managing Director, Gateway Rail Freight Limited, Director, Gateway Distriparks Limited, Director, Snowman Logistics Limited, Mr. Sachin Bhanushali, Director and CEO, Gateway Rail Freight Limited, Mr. Sandeep Shaw, CFO, Gateway Distriparks Limited, CFO, Gateway Rail Freight Limited, Mr. Sunil Nair, Director and CEO, Snowman Logistics Limited, Mr. A.M. Sundar, CFO, Snowman Logistics Limited. I now hand the conference over to Mr. Prem Kishan Gupta. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a warm welcome to the participants to the post-results and earnings call of Gateway 2. We have uploaded our results, press release, and presentation on stock exchanges as well as company website. I hope you had an opportunity to go through the same. The companies have performed well in this quarter, and the impact of COVID-19 has not been as severe as last year, since most of the manufacturing activities continued across the country. We had recorded robust volume growth over the last 3 quarters of FY21, and we have been able to maintain that momentum in the last quarter as well. As you are aware, we had initiated the group amalgamation process, which will help us in bringing further operating synergies and efficiencies for the group. We have received approval from SEBI through stock exchanges earlier, and yesterday we have got the approval of the scheme from NCLT as well. The formal order is expected in 1 to 2 weeks. As a next step, we will now be taking the approval of shareholders for the same. For the benefit of listeners, Gateway East will be merging into Gateway Distriparks, and then that entity will do a reverse merger in Gateway Rail. Apart from bringing synergies on the operation side, it will also allow a combined cash flow of the company available to reduce our debt, which we have already reduced to a great extent, but we would like to reduce it further. Snowman Logistics has seen robust demand from 2 segments, pharmaceutical and e-commerce. The demand from pharmaceutical segment was not only on account of COVID vaccine logistics, but also non-COVID items. Even e-commerce has grown at a very healthy pace for the company. Our projects, which were delayed due to the COVID situation as the labor was not available, are expected to complete in 3 months to reach a capacity of 120,000 pallets. We have plans to increase our capacity to 200,000 pallets in the next 3 years which would involve capex of about 400 crores, for which we are looking at raising funds through both equity and debt. With this, I will now hand the floor for question and answers. Feel free to have any clarity on the statements made by me or the financials which have been shared with you. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We request the participants to limit their questions at 2 per participant at a time. Should you have a more question, we would request you to get back in question queue. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mukesh Saraf from Spark Capital. Please go ahead.
Yes, sir. Good morning, and thank you for the opportunity. So my first question is on the rail business EBITDA per TEU itself. So, the previous quarters, Sachin sir had mentioned that not really factoring in the rebate that Indian Railways is giving, will probably stay at about 8,000 rupees per TEU. Now, obviously, the rebate has been extended. So, do you see that number one getting reset upwards, and also the fact that we have continued to maintain closer to that 9,000 number? Do you still stick by a lower number than what we are doing now in terms of the EBITDA per container? Hello, am I audible?
Sachin? I think Sachin...
Mike, can you hear me?
Yes, sir, we can hear you now. Yeah.
Can you hear me now?
Yes, sir.
Yeah, hi. Hi, Mukesh. Thanks for your precise analysis of our per TEU number. So, a couple of things that need to be kept in mind is that while the rebate which has been given on laden and empty haulage does reduce our unit cost of production, we have been able to maintain the 9,000 rupees per TEU during the current quarter. And if you look at our numbers for the last year, particularly the H2 of last year, we were similarly placed at consolidated business at around 8,900 rupees per TEU. So during currency of the rebate, which is extended until the end of the financial year, we will maintain our EBITDA projection at the same level of 9,000. But simultaneously, we will also try to improve the EBITDA retention by way of various means which we have been employing in the past. Availability of even partial dedicated freight corridor helps us in doing this, primarily because reduced turnaround time results into the basket which is available for transportation in either direction, export as well as import direction, improves our ability to carry more 40-feet containers on 20-feet containers, which improves our quality of double stack operation. So the target during this period will always be 10,000 rupees per TEU. It's a target which is also dependent on the weight mix as well as import-export imbalance. So we'll maintain that target. But going forward, I think we are now gaining confidence that we should be able to maintain our EBITDA per TEU at 9,000 rupees per TEU, even past the post-withdrawal of rebate by Indian Railways.
Sure, that's great. And so a related question, say a couple of years back, you used to provide us an index of double stacking. Obviously, there were constraints at that time in terms of number of 40 feet equivalents we could carry and also the axle load at 23 tons. Now that the axle load is going up to 25 tons and probably DFC can help us carry double stack over a longer lead distance, do you see that denominator itself going up and hence the double stacking index on that larger base can further go up? Do you see that happening, say, the next year or so?
Okay, so currently we have a fleet of 31 train sets, and within these 31 train sets, of 25 of our train sets have 26 of our train sets have 68-ton carrying capacity. Over a period of time, we have upgraded this to higher carrying capacity. The 25-ton axle load is even today theoretically possible, because the wagon which can carry 25-ton axle load at 100 kilometers per hour is not yet approved by RDSO of Indian Railways. So the idea is that we are waiting for that wagon to be available so that we can start acquisition, and it will take at least a few months before we will start getting these wagons available for actual operations, around 6 months or so. So the possibility of doing more double stack is a distinct possibility, but a little distant possibility. I would say that I would look at 22-23 as a financial year in which we should look at doing higher double stack on account of increase in the wagons load carrying capacity, the payload capacity. Apart from that, the current number at which we are doing our double stack, which is maximum possible ratio of actual versus maximum possible, we normally used to hover at around 36. Currently, we are doing about 43. That 43%, the growth in the double stack index primarily has come because of improved turnaround time, which results into a larger basket of containers available for pick and choose movement in both import and export direction, as I mentioned earlier.
Right. Understood that. And just the last bit, sir, the last 6 months or so, we are hearing that the shipping lines are, kind of getting a lot more aggressive, obviously pricing wise, but also in the payment terms, we hear that, the payment to the container train operators are now being done via the shipping lines versus earlier, say directly from an exporter via the freight forwarder. So, how much is this, actually happening? Is it just one or two large shipping lines that are doing this? And could this have an impact, negative impact at all in the EBITDA?
So you have to look at international trade in containers from a true perspective of who is the provider of the service. The container is owned by a shipping line. The vessel is owned by a shipping line, and the booking is provided by the shipping line from origin to destination, whether it is in import direction or export direction. So truly it is transportation service which is provided by the shipping line, whereas we provide them transference service, transshipment service between the port and the ICD, and provide the ICD related services to the ultimate customer once the cargo is domesticated or made available for domestic consumption. So in import direction, we have survived with the regime in which shipping lines used to be the relationship. And in our opinion, as well as experience, relationship with shipping lines are much durable as well as attractive in terms of managing our volumes, playing around with our operating engine, etc., in order to ensure that our unit cost of production is low. Obviously, the shipping lines, particularly the biggies among the shipping lines, do have volume under their control, and that is why they do bargain hard. The export direction shift, as you rightly mentioned, is a distinct possibility currently, and that is what major shipping lines have started doing. There are at least 3 or 4 major shipping lines which want to convert all merchant haul exports into line haul exports, and we have not been against this move by them. If you look at our economics has always been better in import direction as compared to the export direction. The reason for this is that in export direction, we have to deal with multiple shippers, customers which are fragmented, but at the same time, they are extremely price sensitive, and the container train operators have been more than willing to please them by offering them discounted prices in the past. Once the consolidation takes place, probably a stable regime of relationship between shipping line and container train operators, particularly those who operate train sets to their own terminals, so provide an environment which is more reliable from shipping line point of view, is likely to set in. And in my opinion, not only will it protect our margins downwards, but there should be a possibility for improving the margin in upward direction as well.
Okay. So the relationship, the fact that you'll be dealing with the shipping lines alone, even in the exports, doesn't impact the EBITDA per se. You're saying that it can only make it more sticky.
That's right. And it is easier to deal with someone who is actually providing the transportation service, because then you are amenable, accessible to a higher volume, larger volume. It is possible for you to predict your businesses in import and export direction and plan your operations in such a way that your unit cost of production is more manageable than uncertainty wherein you don't know whether a certain export is going to come to you or not.
Right. Got that. Thank you so much for the elaborate answers. I'll get back in touch.
Thanks, Mukesh. Thank you so much.
Thank you.
Thank you. The next question is from the line of Dipesh from Equirus. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. Sir, you have reclassified Snowman Logistics as a non-current investment versus the asset held for sale previously. Now I understand the Snowman is doing well and the future is looking good, but isn't it a perfect time to sell if you're planning to focus on your core activities? I just wanted your thoughts on the same, sir.
Yes, we have reclassified Snowman because we actually stopped the activity of, we don't require to sell Snowman anymore after our rights issue, which we raised funds, and we made the A1 series repayment of the NCDs. So after that, as per the annual accounting, then we have now changed after the annual accounts, we have changed the classification from asset held to sale back to it being an associate company of GDI. Snowman will continue to focus on its core business, which is warehousing. In the transportation side, we have reduced our fleet because we don't want to do pure transportation, which is a margin negative business. But we have launched a technology platform called SnowLink, where we aggregate the refrigerated fleet across the country to service our customers. And in that, it's a positive margin business for us. Apart from that, the two big areas which are fast growing for Snowman are pharma and e-commerce logistics. And we are focusing on expanding on both those areas. So for the pharma segment, it will be served from our regular warehouses, which are capable of handling various products because they are multi-chamber, multi-temperature. For the e-commerce segment, we'll be developing dedicated facilities where we already have some. We have in Bombay, in Delhi, and in now we are developing one more in Bombay and another one in Pune. We have an existing fulfillment center at Pune also. So those are the plans. If you have any specifics, we can.
So, Ishan, thanks, Ishan. Yeah, any plans to increase the stake and make it your subsidiary? Like any plans, or you want to maintain the status quo?
No, we will be remaining status quo. We can get into more details about CapEx later, but we'll be utilizing the funds which we have in Gateway for expansion in Gateway Rail and those satellite terminals which I mentioned to you earlier. So the stake in Snowman will maintain this thing.
Yeah, so second question is basically your net debt only. Your net debt is slightly up this quarter post like 4-5 quarters of decline. So given that you have talked about the acquisitions and the investments of satellite terminals, just wanted to know what is your comfortable net debt to equity or net debt to EBITDA number that you are working with going forward?
Yeah, so our net debt right now is at 470 crores, and we had actually paid a dividend. Otherwise, it would have gone down lower. We wanted to prepay some of our NCDs, but the NCDs terms didn't provide for it. So we paid out the dividend, and we'll continue looking at areas where we can keep reducing our debt. And we want to keep our debt to EBITDA below 2:1. That's the general guidance looking forward.
Got it. Thanks. Lastly, on the CFS business, the EBITDA per TU has come down to around 2,300 rupees this quarter, versus our guidance of around 2,800 to 3,000 per TU for the years going forward. So just wanted to know, is there any one-off in this quarter or any changes in the guidance that you want to make?
No, so I think it's around 25.50 EBITDA per TU this quarter. So basically, it's due to increase in fuel prices, which we haven't been able to pass on to the customers. We are talking to them, and some discounting going on, and also increase in annual labor costs which are happening. So and generally Q1 tends to be a bit slower. So we maintain our target of 2,800, 2,900 EBITDA per TU for the year.
Got it. Thanks, Ishan. All the best.
Thank you. The The next question is from the line of Vikram Vilas Suryavanshi from Phillip Capital. Please go ahead.
Yeah, hi, good morning, and congratulations sir for good performance. I think some of the questions already answered, but just two questions. One on expanding on CFS business. To what extent we have scope for value addition or some revenue side increase apart from the impact of cost, what we have seen?
Yeah. So as far as expansion on facility side go, we won't be looking at any new facility. Within our existing locations, we are going to, increase our last mile services and warehousing services. We're looking at the consolidation business in multiple locations. Right now, it's only being done out of Mumbai. So that's how we'll focus through value-added services, how to increase our revenue.
And would it be possible to share total volume? How much would be a DPD cleared containers broad share for us?
Yeah. So out of roughly our volume, our volume is around 50% in Nhava Sheva is DPD. Chennai would be only about 10-15%, and the other locations would be negligible. As a port, Nhava Sheva is the one doing DPD to the highest. It's reached 60%. But out of that, so say out of 100%, 10 to 15% would be pure DPD. 40% would be normal EXIM, and balance would be DPD CFS.
And last question from my side is that how is the progress on satellite terminals we are planning for rail business? Now I think we are back. Most of the economy is now recovering. So if you can share that.
So we're waiting for the national logistics policy to come out, but we have identified some locations where we want to expand, and we've cited land and identified it. But we want to wait till the policy comes out before we finalize the investment.
Yeah, that was helpful. Thank you.
Thanks.
Thank you. The next question is from the line of Aditya Makharia from HDFC. Please go ahead.
Yeah, hi sir. Just on the DFC, if you could give us an update, is the Mundra to Delhi route now operational, or it is still trial runs going on? That is the first question. And second is, as Mundra gets commissioned, would it not give companies such as Adani Logistics bigger advantage as compared to an independent rail operator, because then they can offer seamless opportunities right from the time the ship enters to the last mile? Thanks.
Hi Aditya, thanks for your question. I think the more the things change, the more they remain the same. So there hasn't been much change on dedicated freight corridor over last one quarter. In the month of January, the Prime Minister had inaugurated the 360-kilometer section between Ajmer and Rewari. The rest of the section is currently under trial. So some of our trains actually are being run all the way from Ateli to Kharjoda, which is close to Palanpur, one station short of Palanpur. The trials are, I would say, stabilizing over a period of time. One of the main issues that dedicated freight corridor corporation is facing is that it is not getting access to electric power supply for running electric trains, and it doesn't have its own electric locomotives. So there is a possibility that the inauguration of entire stretch of dedicated freight corridor phase 1 up to Palanpur from Rewari is likely to start operations only on diesel somewhere in the month of August or September. Our expectation is that beginning of October, which is the beginning of the next quarter, is when we will see a stable operation by diesel locomotive through the entire distance of dedicated freight corridor, both in up and down direction, both in export and import direction. That's number one. Number two is that the track between dedicated track which connects dedicated freight corridor to the ports, whether it is Mundra Port or Pipavav Port, continues to be of the original standard of Indian Railways, which allows only 23 tons of axle load being carried at 100 kilometers per hour under the existing platform of DLC wagons. The operations are likely to stabilize, and the overall benefit of turnaround time, etc., which is what is being experienced by us, is currently likely to stabilize and become more predictable. So the outliers will be much less as the dedicated freight corridor becomes operational. Whether there actually is a real advantage available to a port operator because it is able to offer services, integrated services or not, is a questionable hypothesis, I would say. There is nothing that stops a port operator currently from operating an integrated service. And if we look at the competition numbers, particularly in the vicinity of our Gadiyasaru terminal, we are still heads and shoulders above the service which is being provided by a competition terminal from our neighborhood. So we don't feel threatened at all on that. Dedicated freight corridor is likely to tip the balance of ability to provide better services in favor of the port operator by providing an integrated service. We will continue to concentrate on our method of operations as well as our commercial strategy of ensuring that we cater to the time-sensitive, high-value cargo and provide solutions to our customers. I think that's our USP, and that has been well received by the customers. That's where our emphasis will be.
Okay, got it. Thanks, sir.
Thank you.
Hello. Good.
The next question is from the line of Rohit Ori from Progressive. Please go ahead.
Hi, sir. A couple of questions related to Snowman. Now, in the last quarter, it was mentioned that the new pharma vertical was established wherein you were trying to handle certain COVID-related material. So can you take us through the developments and the challenges, or have you seen any increase in the volumes for the vaccine management?
Yeah, I'll take that. I'm Sunil here.
Yes, Sunil.
So we started pharmaceutical vertical 3 years back, and our focus was primarily vaccine, bulk drug, and the finished products. And we have already been handling vaccines for typhoid, measles, and all. Mm-hmm. As far as COVID vaccine is concerned, we have been handling the Covaxin and Covishield through government agencies. Now we are the national partners for Sputnik vaccine from June onwards. And we are storing these vaccines in 5 locations and also doing the complete value-add activity of repacking, blast freezing of the packaging material, taking orders from various hospitals and having it delivered. So that's the scope. We don't find any challenge. The volume is stable, but yes, it is below the projection. But we see some momentum happening there. And at the same time, since most of the companies are now looking at manufacturing in India, we hope the volume going up in next few months' time.
Sunil, can you put a number to that? Because last time you said that the volumes were quite meager. So just to understand as to what is the handling capacity which you are currently doing for the vaccines?
So see, the capacity depends on how fast the material moves from the warehouse. So we have capacity equivalent to 500 million doses. As of now, we are half of that basis the volume that we are doing. It is important that the throughput is faster. That's what is important in this. And since it is all imported vaccine, Sputnik vaccine is all imported one as of now. We see that the volume will go up only. At the same time, we are talking to other vaccine brands like Moderna, who would be entering the country. So once that comes up, then the overall vaccine volume will be considerable. So from around 10% pharma contribution in our revenue, we expect it to be around 14-15% in a couple of months' time.
Okay. My second question before I go back in the queue. The break-even point of Snowman on a quarterly basis appears to be around 62-64 crores. And even if you put a regular EBITDA margin range of maybe 25 at the lowest and 32 at the highest, on a quarterly basis. By when do you expect that the company will be able to show reputable, profitable bottom line? Because we always go in the red, then we see a little bit of black, then again go back into the red. So to get away from the break-even point or get more volumes, by when do you think that you can absorb the fixed cost and show reputable bottom line?
So, see, we have taken few initiatives as Ishan had explained. The transportation, we were owning 300 trucks. Now we have reduced it to 260 and we'll continue to reduce it to, say, 200. That is one vertical which is negative margin vertical. Learning, and that has been affecting our overall profitability. So what we are doing is we are de-risking there from ownership of the trucks to using the truck from our partners who owns the truck. So we have enough businesses to handle maybe 4 or 5 times of the truck fleet that we have. So 1,000 trucks can also be used in our business. But we find that owning and maintaining those trucks is a bit risky proposition. And hence we have come up with this technology called SnowLink, where we are aggregating the small transporters and making them part of the larger end-to-end game that Snowman is into. And that is assuring us some margin. So once we have this, so today almost I would say 10 to 12% of our revenue comes from this aggregated fleet. As this improves, we expect our margins to be better. That's one initiative. Second initiative that we are taking is the overall new expansions that we have, like we have Siliguri, which is coming up, and then Coimbatore. These expansions are at a place where the ASP is expected to be better, average selling price per pallet. So our profitability from these new additions are going to be better. So that's the second initiative that we have taken. And then in our existing locations also we are expanding our pallet positions. The fourth thing is we had plans to double our capacity a couple of years back, and then we had paused that plan because of GDL's plans of offloading the stake. But at the same time, we had built our capabilities in terms of people and IT piece, for which the money is already spent. So as we expand, these costs will get optimized, which is already there every month. So as we optimize this, our profit is expected to be better and better.
Would you like to share some guidance number? I know it is a difficult one, but your internal targets as to from the current...
Sorry, I missed you in between.
I'm asking if is it possible to share a guidance? I understand it's a difficult question, but then can you give a guidance maybe for next 3 years as to on the top line, what sort of numbers can you see?
No, at this point in time, I would like to avoid any, forward-looking statement. Maybe on a one-to-one we can discuss it offline.
I have no questions back in you. Thank you.
Thank you.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. My question is related to slide number 20, where your design capacity is double of your installed capacity. So hypothetically, if you want to reach design capacity, what type of capex we should be looking at? Hello.
If you look at our design capacity is basically something which is based on the land which is available as an asset in our balance sheet, and there is a certain conversion formula which is used for that. And our terminals have 3 sides: the CY side, the warehousing side, and the rail side. Our rail side has been built to full capacity of the design capacity. Our warehousing and CYs are to be built according to the capacity utilization. Currently, we have roughly 50% installed capacity as compared to our design capacity, and within that we have about anywhere between 55 to 65% utilization. So once it reaches about 70% utilization, so we normally give the next dose of additional capacity, which comes in small quantas. We don't have to develop the entire yard together. So the thumb rule is that we generally have to spend roughly about 10 crore rupees of capex in order to increase our annual capacity by about 10,000 TEUs and 20,000 TEUs, sorry. 10 crore rupees towards 20,000 TEUs or 5 crore rupees towards 10,000 TEUs as annual capacity. So that's how the numbers ramp up. So in order to reach the design capacity, the total amount that we'll have to spend without acquiring any additional land at all terminals put together would be of the order of about 100 crore rupees.
And sir, second question relates to steep drop in EBITDA margin in the CFS business as compared to Q1 of FY21. So what is the reason for such a steep drop from 4,309 rupees per TEU to 2,260 rupees per TEU? Hello?
Sorry, your voice got broken in the middle. Could you just repeat your question, please?
No, sir. In CFS business, our margins are exactly half as if I compare it to Q1 of FY21. So what is the reason?
Right. So Q1 last year had a good amount of ground rent income, which was a one-off income. So it's basically a majority of that was there last year. Customers weren't taking any deliveries, and the containers were just lying at our CFS during the initial lockdown. So it's not really a comparable number. So 2,550 is where our EBITDA per TEU is for this quarter. We are looking at maintaining anywhere around 2,800, 2,900. That's our target. And mainly, as I explained earlier in the call, it's due to rising fuel costs and discounting going up. So once we're able to pass on the fuel costs to the customers, we should see some normalization here. Also, the annual labor increment, which is a big portion of our business.
So, means
request you to rejoin the queue for follow-up questions.
Okay, thank you.
Thank you. Ladies and gentlemen, please limit your questions to two per participant. Should you have a follow-up question, would request you to rejoin the queue. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. Just one question regarding the throughput in both the CFS and rail business. So if I see CFS, we have reached almost 4 lakh ton in FY18. And we are more or less over there. And in rail business also, we reach almost 2,30,000 in FY18. So now question is, let's say if there is no COVID third wave, then what kind of volume growth we can expect in both the division? And once this Palanpur section starts, then how this rate can change, and once this JNPT starts on DFC, how this growth can change?
Yeah, for the CFS part, we're targeting around 80,000 TEUs per quarter. So that would be a sustainable level. It used to be higher, but we've given up a lot of low margin business. We're focusing on maximizing revenue per TEU rather than number of TEUs there. On the rail side, Sachin, request if you could answer, please.
Yeah, so on rail side, if you see our H1 numbers as compared to last year H1 and H1 before that, and if we project for, let's say, the current quarter, we were 1,27,000 in 1920 H1. And H1 last year impacted by COVID was 103. So even if we consider growth of this year versus on Q1 or H1 numbers of year before last, we are roughly logging in about 10% growth year on year, annualized growth. we should be able to maintain that, and number that we would be looking at for the entire year during the current fiscal would be anywhere between 280 to 290,000 TUs for the entire year, as compared to about 250,000 laden TUs that we did last year. Dedicated freight corridor up to Palanpur is definitely going to help in terms of we becoming a more reliable operator, but the modal shift is something which is not going to be, let's say, a shift which is going to come quickly the moment the dedicated freight corridor becomes operational. But over a period of a year, we should experience a double-digit growth going forward, and I would put it into mid-teens rather than lower teens. Once the dedicated freight corridor becomes available. So that's the growth projection that we are looking forward to.
Okay. Thank you. That's it from my side. Thank you.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks for the opportunity, sir. My first question is for the phase 1 Rewari Palanpur of DFC. You mentioned that starting October we would see traction on diesel, starting. By when would the electrified section be operational, and with double stacking? How much throughput is currently through double stacking? And when you mentioned that the growth would be in double digits, say 1 year down the line, or mid-teens, is that adjusted for the revenue realization potential reduction that may have to come because the throughput goes up for you and the competition?
Okay, thanks. That's a pretty long question. I'll start at the first part of it. So the completion of the entire dedicated freight corridor is likely to be by end of current quarter. The actual announcement may take place a little earlier, but stability in operations all the way from Rewari to Palanpur as double stack operation with diesel locomotive in both import and export direction is something that should be expected by beginning of October. The operations currently are double stack operations for Mundra Port and Pipavav Port. So as far as these two ports are concerned, double stacking doesn't change. Because of our innovation, Viramgam terminal that we have brought in, we are able to do partial distance double stacking of our Nhava Sheva volumes as well. That has brought in both regularity of our service to Nhava Sheva as well as our improvement in margin. The rest of the dedicated freight corridor, which is from Palanpur to Nhava Sheva, is likely to take at least a couple of years going forward. There have been some positive developments with respect to land acquisition and release of land from the unauthorized occupation or squatting, which was being done by the original owners of the land, etc. However, even today, a continuity of land available for a linear project like railways is of crucial importance, and that is still not established. Even after it is established, there is going to be some time before the construction work is completed by DFCCIL and the entire Nhava Sheva route becomes available. The visibility given by Dedicated Freight Corridor Corporation people itself is that not before end of 2022 or March 2023, they expect this sector to be available. As far as our double stacking capability is concerned, that is dependent on our imbalance in imports and exports, as well as the speed of trains or the turnaround times. Higher the turnaround, there's a larger volume available. Larger volume available makes you more amenable to double stack, particularly of double stacking 40-feet containers on top of 20-feet container. So keeping all this in mind, our double stack capability is definitely going to improve over a period of time. This will further be enhanced once the higher capacity wagon, the wagon with 100-ton gross load or 75 tons payload wagon becomes available. However, acquisition of these new train sets is going to take a little time. These train sets have a life of 30 years. So we would rather be cautious while getting into acquisition of these assets. And the asset acquisition is something I would consider to be available in year 2022, which will further improve our double stacking capability. The speed part of it is concerned, the speed has more or less got established, and we don't expect any dramatic improvement beyond the current level of turnaround times, wherein the Mundra Port and Pipavav Port overall turnaround time has practically halved now. So from 72 hours, we come down to 36 hours. And this is an acceptable level of turnaround time for the trade. And that's the reason why we have started seeing at least a partial shift from road to rail. This tendency, this trend is likely to consolidate further as the entire dedicated freight corridor between Palanpur and Rewari will get commissioned, say, by end of September. I hope that addresses all the questions that you have raised.
Sure. Thank you. Just a couple of follow-ups. What percentage of...
Can I request you to join the queue, because there will be other people who will also be interested in asking more questions.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
So my question is that do you feel that the business is now moving towards people who are totally integrated like Adani is, and would they be a big competition for us, or they could be something which will really eat up into a lot of our business? And second is, how do you feel that we'll be able to, with more export volumes coming in, how will our profitability be helped with that?
Okay, to address the first, instead of addressing it by keeping any one particular operator in mind, let us look at the generic issue of whether holding multiple aspects of the value chain of land transportation of international trade really helps or not. As far as ICD and rail is concerned, it does help. But as far as the port is concerned, port does not give you any direct control over the volumes which are being carried by your trains as well as to your ICDs. It does give you some advantage of striking better relationship with the shipping lines, and that advantage is available even today. So one doesn't have to wait either for dedicated freight corridor for this advantage to accrue to any operator. So whether it is DPW or Adani, they have been offering integrated services like handling at the port, transportation by rail, as well as operating from the ICDs that they own. I think once you have these pieces in the value chain available under your belt or in your offering, what matters most is your commercial strategy and your operating strategy in order to ensure that the quality of service that you're providing to your customers and the customers that you choose are such that you are able to run your business profitably. At the same time, you are very attractive from a price service combination to the customer. There, I think we have been able to establish a credible record across last 12, 13 years. And we'll continue to follow our philosophy of keeping the discerning customer at the center of our offering. And we'll continue to change our offering to suit the needs of large customers as well as the shipping lines. To address the second part of it, which is about exports, yes, exports do help because we are in a regime wherein import-export imbalance is tilted in favor of imports, and we look for more exports all the time. So the opportunity of carrying more exports without increasing capacity or fleet size is a real opportunity to reduce our unit cost of transportation as well as improve our margins and our revenue from this business. There are quite a few businesses which are into exports which are also import dependent. So that also gives us an opportunity of improving not only export direction but also import direction as the exports grow. So we are looking forward to all these aspects of intermodal trade in international sector to help us consolidate our organic growth at the existing locations, and we'll also be looking at inorganic growth by way of developing multiple satellite terminals and coming out with and looking at possibility of acquisition if one is available in the market.
Actually, my question was more pointed because the operator in question owns the port also in this case. So, I mean, would that be a big...
okay, so that's
almost
what
like two to three multi-locational ports, and they could, really pitch the larger customers with a very good deal.
No, so even today, there's nothing which stops the operators who have port as well as ICD as well as rail to offer such services, and they do offer such services. In spite of that, if you look at the competitive landscape where we operate from, we are heads and above shoulders as far as our volumes as well as our economics for us as well as our customers is concerned is better than that of others.
So that's because of our strategy and customer centric approach.
Sorry.
So that's because of our strategy and customer-centric approach. I'm able to understand.
I would consider it more because of our integrated commercial and operations policy centered towards the customer, which has resulted into we having established in the niche in which we operate currently.
Thank you. The The next question is from the line of Jignesh Makwana from Asian Market Securities. Please go ahead.
Yeah, thanks for the opportunity. I think most of the questions have been answered. I just have one bookkeeping question. With respect to taxation and the P&L, how should we look at or how should we take it forward for the current year as well as for the FY23 as well for console entity?
Sorry to interrupt, Mr. Makwana. So there's a disturbance coming from your line. Request you to mute your line when the management answers your question.
Sure.
Yes, sorry, we didn't understand the question. Could you please repeat?
Yeah, my question was pertaining to the taxation from the P&L point of view, because we have been witnessing quite volatility in the taxation in the P&L account. So just want to say, what should we take it for FY22 as well as for FY23?
Sandeep, can you please answer that? Sandeep, are you there? Basically, Gateway Distriparks CFS business is fully taxed, and Gateway Rail is under the ATIA tax benefit. So it's paying MAT right now, and then it will get MAT credit for it for a period of 10 years is the total ATIA window, and after that we can utilize it.
Okay, and my second question is on, we were expecting, I think a couple of years back when we were commencing the Viramgam terminal, we were expecting certain synergies or benefits from that terminal. So have we achieved the full potential benefit of that Viramgam terminal?
Sachin, you take that please. Sachin?
So the line for Mr. Sachin got disconnected, so I'm calling.
Okay, let me take this question. See, Viramgam terminal has two parts to it. One is double stack hub and spoke ICD, which we have been using it for bringing import containers to this terminal from all the three ports, Mundra, Pipavav and Nhava Sheva, and then taking it on double stack to the maximum possible extent up to Gadi, and similarly from Gadi to the other ports. So that advantage, slowly and gradually, we have been getting this advantage for the last 3-4 years, and it is only increasing because of the presence of this location. The ICD activity has been started by us recently, and we can see some good attraction for exporters in Sydney, but even imports have started coming in. So it will take some time for the ICD business in that region at Viramgam to grow, because it involves a lot of process of shipping lines, opening the BL point, and so far we have some shipping companies who have opened the bill of lading point, but we need more so that imports can also be brought in there, and the volumes I would say is close to 1,000 TEUs a month.
Thank you. Ladies and gentlemen, please limit your questions to one per participant. Should you have a follow-up question, would request you to rejoin the queue. The next question is from the line of Achal Lohade from JM Financial Services. Go ahead.
Yeah, thank you for the opportunity. So my question is on the rail business. What I'm trying to figure out is what is the potential, what is the total volume which is available for DFC, as of now in terms of million TEUs or million tons, and what is the rail market share currently of that total volume, because certain part of that volume is coming through road. Just wanted to understand that aspect first.
Sachin, are you there?
Yeah, I have come back. My call had got dropped. So, yeah, Jignesh. So it's an interesting area actually for which detailed data points are not available, but one can still do a little bit of blue skying and come out with some trends. So if you look at total number of TEUs that India gets into its ports is, let's say, about 15 million TEUs, out of which 70%, about 10 million TEUs are done by the three ports on the west coast, which feed into the northern India hinterland. And it is generally considered that currently, though we are operating at about 25% rail share from these three ports into the hinterland, meaning thereby doing about 2.5 million TEUs, all operators put together, shorter and longer distance markets. It has a potential of roughly twice that size. Now, this is not on account of the business being done by road, but there is a large volume of cargo which is meant for the hinterland is currently being handled at portside CFSs, particularly in Mundra port environment. So there is a good deal of cargo which can be converted from road by road through CFSs, particularly in the Ahmedabad market as well as into North India market, which comprises of NCR, Punjab and the rest of North India. But this is something which is going to take some time because the economics of operation at a better turnaround time as well as at a better economic offering is something which will get established over a period of time. Once the dedicated freight corridor is available up to Palanpur, the existing route between from the dedicated freight corridor up to the port will get upgraded to the same level. That means we'll be able to carry 25-ton axle load cargo at 100 kilometers per hour. So the potential is huge. Apart from that, India also suffers from poor container penetration. India at present operates, say, about 55 to 60% of its containerizable cargo actually being carried in containers, and the rest of the cargo even today continues to come by what are known as geared vessels or break bulk vessels. This further will get consolidated, and this is an activity which the shipping lines will undertake over a period of time, for which they need an environment of adequate capacity at the port town, by way of various terminals, adequate capacity by way of transportation on dedicated freight corridor as well as ICDs. Now, port capacity and ICD capacity has got established. So we're waiting for this piece of dedicated freight corridor as well as upgradation of the existing track of Indian Railways to come to the level of dedicated freight corridor. And we are quite sure about that because of this we will see double-digit growth irrespective of the macroeconomic growth of India, because this is where the benefit of better logistics infrastructure is going to help in converting break bulk cargo into containerized cargo. If you want to know more about this, we can have a separate discussion outside the conference call on this. It's an interesting subject.
Sure, sir. Thank you so much.
Thanks, Ignesh.
Thank you. The next question is from the line of Aditya from Kotak Securities. Please go ahead.
Hi, everyone, and thanks for the opportunity. Just a clarification before the question comes in and to what you responded to the last participant. What you were suggesting, Sachin, is basically that bulk of the gains from rail to road will happen on volumes that are originating from Mundra, and JNPT may not be providing much of an uptick in that context. Is that a fair clarification?
No, Aditya, no, that's not right. See, the distribution between JNPT, Mundra Port and Pipavav Port is directly dependent on the environment which is provided by these ports to the respective businesses. So currently, Nhava Sheva, because of capacity constraint on the ocean side of it, on the quay side of it, had actually got converted into a CFS-oriented port rather than ICD-oriented port. Once the dedicated freight corridor reaches JNPT, which may be in year 2023, let us say, and it is possible to do double stacking all the way from Nhava Sheva into the hinterland. On ocean side, it is always easier to operate out of Nhava Sheva. So there is a distinct possibility of not only some CFS business in Mundra Port getting converted into ICD volume because of dedicated freight corridor, but the dedicated freight corridor may actually tip the balance again in favor of Nhava Sheva, because the mainline vessels prefer to operate from a terminal, operate from a port, which is easy to operate, is cheaper to operate, as well as is much efficient to operate. Any vessel operator having two or multiple calls in both the directions, the cost increases. So the possibility of ICD volumes, which are shifted from Nhava Sheva to Mundra Port and to some extent to Pipavav Port, are likely to come back, but for that the environment of port side capacity, that is phase 2 of the terminal 4, as well as dedicated freight corridor will have to be in place. So we'll have to wait until 2023. It's a patience game.
Okay. And that clarifies, Sachin. No, the question that I had from my side was more on the NCR market, or let's say the capital region, Tughlakabad having taken a price increase. Firstly, if you could give us a sense of when this price increase has come into force, and secondly, what has been the kind of response from our side or benefit that we have been able to receive on this count?
As I understand it, and I may be wrong there, the price increase was done on account of the increase in land licensing fee, which was levied by Indian Railways on Container Corporation for terminals which were built on railway land. And as a consequence, last July onwards, there was a notification which was issued for increase of the import-export business out of Tughlakabad on account of land license fee. However, it got delayed up to December, and it has been partially rolled out for various segments of businesses. None of the other operators have taken a price increase towards that. And the advantage arising out of this is likely to be that on account of higher costs, the businesses are likely to go to the natural geography. So earlier, whatever Gurgaon business would be going to Tughlakabad, now would find a better place to operate out of Gurgaon terminals rather than go to Tughlakabad. I think the price pressure is going to be there as far as customers are operating out of Tughlakabad is concerned. And we have already seen some traction in our marketing efforts, the results of marketing efforts, that we have been able to convert businesses which are being dealt with in NCR, in Delhi area terminal, are getting converted into non-Delhi area terminals within NCR itself.
Sure. Is the just a clarification? This one, if there was a split of Tughlakabad volumes, or what gets catered to by Delhi?
Aditya, I think this is a gateway rail conference, so we should stick to gateway rail business rather than
it's business for you. That's what I'm asking you. It's business for you. That's what I'm asking you. Nothing more than that. Yeah. But fair. I understand what you're saying.
We can have this discussion outside this conference call, but the conference call should concentrate primarily on business of gateway Distriparks rather than competition activity. That's my view.
You got that, Sachin. Thanks for your response. Those were my questions. Thank you.
Yeah, thanks.
Thank you. The next question is from the line of Rohit Uri from Progressive Share Brokers. Please go ahead.
Sir, thank you for the follow-up. Sir, I just wanted to know that in terms of these expansions for pharma, which were mentioned, and in the last 6 months or so, we were speaking about QIP of around 250 odd crores. So can you take us through the developments or any timeline that you have for completing this process?
Yeah, sure. So to answer your first question, in terms of pharma, we have internally created a pharma vertical where we are targeting this business separately from our regular marketing. And to that effect, we are also evaluating the possibility of taking some dry warehouses on lease and converting them to the specifications required for different pharma customers and servicing those. This is, targeting non-COVID pharma.
Okay.
COVID vaccine in any case is going on from an existing facility. We have also conducted temperature trials which can cool down up to -80 in case of vaccines like Pfizer coming into India. So that's on the pharma front. In terms of fundraising or the QIP, we were waiting for this quarter's results to resume discussions with some shareholders who have shown interest.
Okay.
And we'll be updating once we have some clarity on that.
Okay. And in terms of price increase, can you share something on that? The realization per pallet, what is currently the range? I'm okay with the range if you can just share the range, and if there was any price hike taken recently in the last quarter or so.
Sure, I'll ask Sunil to answer that.
Okay.
Yeah, hi. So there were some success in terms of price increase, but it is still less than the normal case that we used to command 3 to 5% of price increase. But due to COVID, there are some segments which are affected badly, like QSR and ice cream. So we have some limitations there, and we are not able to get price increase from them. But as far as the other sectors are concerned, like pharma and seafood, we could get some price increase there.
And the range for realization per pallet, if you can share that?
We are around 1,400 to 1,450 as of now.
Okay, sir. Sir, in terms of the warehousing, which we were talking about for Kundli and Amazon warehousing, any developments? Were you able to expand in Mumbai and Pune, which was spoken about in the last con call as well?
So we are constructing one warehouse in Mumbai now, which will be operational by 10th of August.
Okay.
And another warehouse in Pune is under construction that should be ready by 10th of September. So these are the two expansions while we are discussing others and not yet finalized, but these two are finalized and we are constructing them.
And timeline for Siliguri and Coimbatore to come on board, if you can share that.
Siliguri is almost ready. We are just waiting for some compliances. It should be operational by 15th August or latest by 1st of September. In case of Coimbatore, it will take another 3 months' time.
Okay, sir. Thank you, sir. Thanks a lot. Thank you.
Thank you so much.
Thank you. Thank you very much, ladies and gentlemen. That was the last question for today. Participants have missed out due to time constraint. They can reach out to the management and SGA. On behalf of Gateway Distriparks Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.